What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on Polygon Matic. And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news that might drive the price of this token. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here at this very point when we had first touch of this support line, and I've told you that we have decent chances to have a bounce, and if you want to enter the position, I suggested to enter your position right here, but put your stop loss slightly below this previous bottom, and it was not more than 1.7% of downside potential. And for those of you who were tolerant enough, your stop loss should be right here at this very point at $1.9 mark. And I've told you that this about 6.5% downside potential is the last chance from which we might have a trend reversal. And as you can see from this point, we went slightly higher. We hit again this range of resistance, and it is a very good line, I have to say. We have several touches right here, right here, right here as well, almost touches right here. And we had a rollover from this range at this very point, and we went to our current price for more than 28% to the south. And it is a very huge sell-off, I have to say, and we had a huge increase in volume. And basically it is what it is. We have to be prepared for this type of actions, and that's why we put our stop losses in order to reduce our risks and in order to protect our capital. So, what should we expect next? I will show you in my technical analysis. And for now, let's continue with the total sentiment for entire crypto industry. We are sitting at $1.63 trillion of total market cap. It is a 4.69% decrease over the last day. And definitely all major cryptocurrencies are in red. Bitcoin lost about 2.9%, Ethereum lost about 6.1%, and BNB lost about 4.8% during 24 hours period. But on a 7 days period, all major coins are deeply in red. There are double digits in red, and Ethereum lost about 25%, 1/4 of its value. It lost during only last week. So, harsh sell-off, and we have to be prepared for this and just protect our capital. So let's continue with the Polygon numbers. It lost about 8.48% during 24 hours. And for now, its total market cap is $11.72 billion. It has $2.4 billion of total tradable volume, and it's higher than it was previously for about 9.3%. And I have to say that this movement to the downside with increase in volume shows the extreme bearish pressure, and unfortunately we might see the trend continuation. So what was the reason of this sell-off? Let me show you right here. This article was published on Yahoo Finance on January 22nd, and it's titled "The Black Friday Crypto Crash That Wiped Out $136 billion Was Caused by..." And let me quote you this. Although the market is yet to close, it is safe to say that January 21st did turn into the Black Friday of the month. With the overall market losses running up to $137 billion in the last 24 hours, here are the possible reasons as to why it could have happened. First of all, Bitcoin-led market liquidations. And definitely on a high leveraged market, it might be a huge reason of the sell-off. And let me quote you this. The market witnessed one of the highest ever single day liquidations today, as since the opening of the market to the time of this report. Almost $880 million worth of liquidation had been recorded. Leading this was Bitcoin, which registered close to $175 million liquidated contracts. Next one, second point, Russia's crypto ban. Today, one of the biggest economies in the world proposed banning the use and mining of cryptocurrencies on Russian territory. According to them, cryptocurrency acted as a threat to financial stability and reason pertaining to citizens' well-being, and its monetary policy sovereignty drove the ban. This was one of the biggest blows to the global crypto market after Chinese ban, since Russia is the world's third largest Bitcoin miner, which also raised environmental concern. The bank explicitly stated, the best solution is to introduce a ban on cryptocurrency mining in Russia. And I have to say that, yes, we have this news, but it is only a proposal to the government to make this type of actions. It is not the real action. We are not banning the cryptos. And I have to say that a lot of people from our government are mining Bitcoin. And this means I don't think that they will vote for this law. And that's why, in my opinion, it is just a short-term bearish pressure. Definitely, we might see some actions related to Bitcoin, and potentially it might be negative. We will see much more rules that will regulate this industry. But all in all, the total crypto ban is the less likely outcome of this news. So, and the next one, third reason, is the dip of Wall Street. USA's stock market has had significant impact on the crypto market in the past, and for the same reason. It won't be surprising if that would be the case today as well. The S&P 500 index over the course of 72 hours has lost almost 4%. Plus, since Bitcoin and the SPX share correlation as high as 0.59, the dips were bound to affect one another, and possibly it did. So, it is an effect of synergy, and definitely it is a negative effect of synergy in between these two markets, I mean crypto market and traditional market, and that's why we have this harsh sell-off. But let's continue with the Polygon news. All in all, it is a very good fundamental network that is still developing its partnerships, and that has a huge potential. So, on coinmarketcap.com we have this article that was published from CryptoSlate website, and it was published 7 hours ago, and it says, Anomi announces a new bridge, its hybrid DEX and Forex market are arriving to Polygon. Definitely it is a good news, but overall it doesn't affect the price of Polygon at all, because of the total sentiment of the market. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, as you can see, I was 100% right that this was the correction, and definitely we have this as our three-wave structure. In a greater scale, it is only A wave. This three-wave structure is our B wave, and we have to have the bottom of our C wave, and we have to complete this structure to the downside in the shape of 5 waves structure. In this case, it will be a major ABC correction from this point to this one. This was our lowest one, this is the top, and we have to find the bottom with our C wave. So let me upgrade the scale of this wave. And here it is. And this means we have to zoom out a little bit, because we have to retrace the entire wave. Let me show it to you. From the end of July till end of December. And definitely we have to pull the Fibonacci retracement tool from this very bottom to this very top. And for this case, let me show to you where we are now. And we hit golden pocket. And this means from this range we might have at least a bounce. And this bounce might lead to, let me show it to you. Again, I don't need this tool for now. Let me zoom in again a little bit. And we have to retrace the entire wave to the downside. And for this case, I pull the Fibonacci retracement tool from this top to this bottom, where we have the bottom right now. And it is right here. And the bounce should be at least at 0.236 level to the price point of $1.64, or 0.382 Fibonacci retracement level to the point of $1.79. This means we have a short-term upside potential of about 4.2% and even to 13.48%. And somewhere here we might have next leg to the downside. And guys, don't get me wrong, I'm bullish on this asset. But if we have the movement to the upside that lasts 5 months, we cannot have a retracement that lasts only, let me show it to you, 27 days. We have to have at least 1/3 of its length in order to stay in line, in order to have a healthy retracement. That's why just be cautious, and in this case you will protect your capital, and at the end of the day you will be profitable. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!